It's Sunday, the 21st of June 2015. This is a chart for Woolworths. It's been talked about a lot in the last few weeks in the media and in the papers. Obviously, they've had a very poor last 9 months, breaking down from close to $40 down to 27 now. When I did a chart of this last time, it was the 26th of October last year, and I think it was I think I was talking about it just after it had broken this trend line. And I just said that if it usually when a stock has these long-term trends and it breaks down, it'll come up and try and retest the trend. And the week after I put that up, it did that and failed at the trend line again. Since then, we're down another, I guess 30% at least. And this first obvious resistance zone at $30 was sliced through on a couple of those production downgrades. And now I guess the question is whether it gets to this long-term support zone at $23 to $24 sort of area. This week there was heavy volume again. I don't know. The trend is starting to sort of feel like it might come to an end. But potentially, I'd like to see a few weeks of low volume here. I'm not sure if it's going to turn particularly quickly, but I think it's when everyone's bearish. You're seeing a lot of stuff in the media about competition from overseas players, from Aldi and from Lidl, and the problems they've had with their Masters hardware stores. It seems excessively bearish, and I think there's only a few stocks on the ASX when everything is against them. It's likely to come back just because of the 15 to 20 years of outperformance of it's a top company, dividends, good dividend yield, and I think that all those factors will come in, and there's going to be a few people wanting to buy this stock, particularly for the dividend yield. One thing I did point out in the previous video I did, and it's certainly quite a good lesson in long-term charting, is this trend here. You want to see, when you see these long-term trends, you want to see volume continuing to increase as the share price increases, and that's exactly the opposite of what we saw here. The downtrend, it was sort of a gradual downtrend as it started to move up, and as it went to a marginal new high here, there was also a divergence on the RSI. So those are classic factors that sometimes show when the chart is really giving you a bit of a leading indicator that this is going to start to break down. And this this break of the trend line here as well. Once it failed again at this trend line, that was the exit point if you're a long-term holder of this stock. But just something that I found interesting, and it's quite a good lesson in long-term charting. But yeah, Woolworths, I think, going to start to turn around soon. It's a contrarian play now, which is pretty rare for Woolworths, but I can see it coming to a bottom here soon, but there's probably no need to rush in. The results are probably going to still be quite weak, but there's not a lot of downside from here, and if you've got quite a long time frame, I think it's probably a good buy.